There's a problem hiding in plain sight in Canada. It's not inflation, it's not taxes, it's not even your investment returns. It's the mortgage, the single largest financial obligation most Canadians will ever take on. It's been treated like a 5-year shopping decision. What's the rate? Can you beat this offer? Fixed or variable? But a mortgage isn't a 5-year event. It's a 25 to 30-year outcome. And if we don't structure it properly, the lifetime interest cost is astronomical. Today, I want to introduce you to something I've spent years refining and thinking about. It's called the net 0% mortgage principle. It's based on the Smith Manoeuvre. It does not change the Smith Manoeuvre, it doesn't replace it, it reframes the outcome. Over the last 2 decades, housing prices in Canada have exploded. That means mortgage balances are larger than ever. Larger balances mean larger interest costs. And over 25 or 30 years, the total interest paid on a typical Canadian mortgage is staggering. Yet modern financial planning still treats the mortgage as something separate. Mortgage brokering focuses on rate. Financial planning focuses on investments, and accounting focuses on compliance. But the mortgage, the elephant in the room, is rarely integrated into the long-term wealth strategy. That disconnect is the problem, because the mortgage is not just a debt, it's the central lever in a household's financial life. Almost every homeowner has the same moment. You look at your amortization schedule and you realize how much of your payment is interest. You work hard, you earn income, you pay tax, you make the mortgage payment, and a massive portion disappears into interest. Not because anyone did anything wrong, that's just how the system works. But what if interest didn't have to be a permanent loss? Not because the bank stops charging it, not because of a loophole, but because you built a counterbalancing asset beside the debt. That question is what led me to articulate the net 0% mortgage principle. Let me be clear, net 0% does not mean your contract interest rate becomes zero. It is not a guarantee and it is not a gimmick. It is an outcome orientation. The net 0% mortgage principle is the intentional pairing of your mortgage debt with an investment plan designed to counterbalance the negative impact of interest and taxation over time. The aim, not the promise, the aim is that over the life of the mortgage, the investment portfolio built alongside the debt, net of capital gains tax and net of paying off the converted investment loan, leaves you with wealth equal to or greater than the total interest you incurred. In other words, instead of interest being a permanent loss to the banking system, you build a counterbalancing system designed to recapture it. That's the philosophy. Now, this didn't appear overnight. It unfolded through 2 powerful concepts. First, the Smith Manoeuvre, specifically the foundational process known as the plain Jane. And second, the philosophical goal of the infinite banking concept, which is to neutralize interest costs in your life by becoming your own source of funding. When you combine a readvanceable mortgage structure, the debt conversion mechanics of the Smith Manoeuvre, and the philosophical goal of neutralizing interest drag, you get the net 0% mortgage principle. It doesn't change the Smith Manoeuvre. It expresses the long-term outcome differently. Let's simplify this. You have a mortgage with a readvanceable home equity line of credit. Each payment you make reduces principal. That principal reduction creates new borrowing in a home equity line of credit, which we're going to call a HELOC. That room is reborrowed and invested into an income-producing asset. If structured properly, the loan on that investment becomes tax deductible. The tax savings can be applied against the mortgage, and this cycle continues. Principal reduction readvances into the HELOC, we invest and we repeat. Over time, your non-deductible mortgage shrinks, your investment portfolio grows, and your tax efficiency improves. That's the plain Jane Smith Manoeuvre. Now look at it through the net 0% lens. Debt on one side, growing asset on the other. And the asset is specifically designed to offset the lifetime interest cost. Same mortgage payment, no new budget requirement, no need to earn more, and no need to spend less. Just structure and discipline. In the modern Canadian economy, mortgage debt is enormous. The interest cost over a lifetime can be hundreds of thousands, sometimes millions of dollars. Rate shopping alone will not solve that. Yes, always try to get the competitive rate, but rate is secondary to structure. The net 0% rules of engagement are simple. Structure first, pay your mortgage with a counterbalancing system, use the principal reduction as fuel for long-term investing, reduce tax drag wherever the rules allow, and stay disciplined. Modern financial planning hasn't caught up to the relevance of mortgage debt. The mortgage must move from being transactional to being the foundation of the plan. This is not a shortcut. It's not risk-free, and it's certainly not for everyone. You cannot guarantee 30 years of returns, you cannot guarantee interest rates, and you cannot guarantee tax rules. This is probability, not prediction. But the mechanics of debt conversion are deterministic, and when properly implemented, the structure is powerful. Net 0% is the aim, it's the North Star. The net 0% mortgage principle is also a challenge to the financial industry, to mortgage brokers, to financial planners, and to accountants. Stop planning around the mortgage. Start planning through it. The mortgage is the largest financial instrument most Canadians will ever touch. It deserves to be integrated into a long-term wealth strategy, because when you pay your mortgage properly, the biggest payment of your life stops being a burden you endure and becomes the engine that builds your future. If this resonates with you, this is just the beginning. The net 0% mortgage principle is not a product, it's a philosophy. And when you combine the Smith Manoeuvre, it gives Canadians a structured way to aim toward neutralizing the lifetime cost of interest. Structure over rate, pair the debt, build the counterbalance, reduce drag, increase outcomes. That's the net 0% mortgage principle. And once you see it, you can't unsee it.